Patron, take them away.
Okay, boys and girls, I'm going to do something for Bubbles. Bubbles is one of the guys in the squad, and he was interested in JP pairs this morning, and I thought, well, let's have a wee look at it, as much as other things. Yeah. Let's have a look at Winky. Yeah, I look at her all the time. Look at the wild wonder there. She is wild. She's been wild this morning.
I haven't.
Yeah, I've been outside. Look at the state of your hair. It's wild up here. It's blowing a gale. Never mind. Right, let's quickly jump over into this, and I'll kind of explain in a strange way what we're looking at. I dropped into the Discord earlier on, and a little salute to Paul as well. You're doing really well, kid. Keep it going. This. Now, what it is I looked at it. It's currently about 10:15. Drop this in for them. And I like to follow up what I'm doing. Now, if you look at this, it says it's a buy, it's a B, which means there's quite a bit of strength in it over the next hour. Monitor it, but keep your TP low. All right. What does that mean? It means it's stretched to buggery, and I'll show you that in a moment. Now, if you look down here, it's got like a target of like 20 pips. All right. So maybe half that. You know, these are minimum targets based on when it's reasonable. But it's also telling me the low time frames is down. In fact, what I'll do is I'll kind of take this away. I'll pull up the bigger one so you can maybe see it a bit neater. Okay. That might be better for you. Okay. Right. Pound JP has a big ATR. So the natural target for it is 20. But it's not on the radar because it hasn't flashed up here with the time frame. I've added this in simply because Bubbles was looking at JP pairs and he mentioned pound JP. So I thought I'd look at it. Now it's telling me it's to buy it, so I should really be buying this today or over the course of the next couple of hours. B means it's reasonably okay, but that's telling me to be low TP, because when I put the figures in, it spits it out. Now my worry is this. So I can either scalp down the market or I can go for the better bias, which is up. All right. So let's look at this. What would we see at this moment in time if I am to take a look at this chart? Well, let me just look at it. It's surging. It's still got 3/4 of an hour before this market will end its hourly candle. So what we can do is, or at least we will do when the thing wakes up. Come on. Bloody hell. Let me just refresh that. That's better. Computer's on a go slow, guys. What we can do is, if I whack in levels, we can see we coming up to a level. But how far is that level to go? Well, let's see. We'll find out. Don't think it's got far at all. Take the 5 minutes. Let's have a look. 5 pips. Doesn't go far at all to go 5 pips. So it'd be stupid to enter the market at this point. Stupid. Because that can easily bounce back on itself. Right. Let's take this out to an hour a second. Where can this potentially go in the grand scheme of things? Well, probably this swing point here. So where are our buying points? Well, it's a break of this to get up. Probably be able to do, well, you do okay with that. Or you let it come back on itself and you take a lower, sort of like a trade down over to bounce back up. So what's my sheet told me to do? It's told me the low time frames are going to be selling, right? But how do we know? Well, there's a simple way of finding out. You put a Bollinger Band on. Well, there's a Bollinger Band. What's this Bollinger Band telling me? Well, let's drop it on an hour and find out. It's telling me it's stretched to buggery, but it's also telling me it's flaring like hell, so there's a lot of strength in this. Right, it's at the level. Fine. All I need to do now is I can drop an order above that level. Right, there we go. Into the next one. Boom, just like so. Right, what are we doing here? Let me explain. I can see it's stretched. There's zero sign of that collapsing in on itself. And it has the rest of the hour to go. So for the hour, that's going mental. What else can I look at? Well, if I put on, say, an RSI. I don't have to, but I can. There's a standard RSI. Look how high that's up. It's at 82. There's a reversal on the cards. Right, but we've also got a lot of pressure, and until that comes back into range, that pressure's still there. All right, and often when it's this high, who's to say it can't go to 90? Just have to wait and see. So we'll get rid of that. It's a bit light. But we're going to concentrate on this Bollinger Band a second. Take it down to 15 minutes. Now what can we see? Well, we can see it's collapsing in, pressure's still to the top, so I'm quite happy. I'm happy to enter a market here because I want to get it up. Well, it said, what did it say? 20 pips. So there's 20 pips. All right. Now, is that a good target? Well, let's find out. Pull this back. It's bang onto the top of that sweeping point. So I'm happy with that. Okay. Now what can I do? Don't have to do anything really. I can wait and see if it plays out. I can put another order here and put another order there, here and here. All buys. Why? Because they'll get me a better price. And it's literally as simple as that, guys. You know, this is probably one of the simplest trades you're going to find because you've got pressure on your side. Bollinger Band told me that. The RSI is telling me to be careful with my target. Fine. Well, if I'm careful with my target, where am I going to place that target? Well, I'm going to place it at the last swing point. That's there. Is it within the target range that I wanted? Yes. And why did I place the order above the level? Well, the level will hold the price. If it's going to repel off, it will come up, touch it, and away. But it had to break through. It did. Because I could see it. There's the break. It's now triggered the order on the other side of the level. So who's to say it can't bounce off there and then run up to there? Now I could be brave and place my order up here. Okay. And then just measure out a level. Give me a second. I've said 20 pips. 20 pips. Draw a baseline. Now we talked about baselines today in the meeting. The baseline is exactly what it says it is. It's just an area you want to get to or transact business at. Now, as soon as that gets above there, I'm happy. Anything between that line and that line, I'm more than happy with. So away we go. We'll just let it play out. See if we get 100 quid or whatever. I did it yesterday. I was talking to the guys about the footsie. I didn't do a great deal yesterday because I was shopping. But we still got our trade, which I'm quite happy with. And that's all you do. You just little bits over and over and over. Now, my low time frame on the sheet told me it might sell down. So I'm not worried about this red mark. I'm not worried if it runs all the way down to here. In fact, maybe he's like it to run down there, get a better price. And it might seem to be scary, but if I enter here as well as here and get out there, because that has so far to come back, it'll pay me well. Let's run it out, see what happens. Okay, Bubbles, that was for you, my little friend. What's the moral with this sort of trade you've looked at? Well, ultimately, it's down to conviction. We spoke about this at length in the meeting this morning. We went through various different scenarios. And one of them was looking for a baseline. This. Now there it is played out. I knew there's a high probability it'll come looking. I'll have to move this out a touch. It'll come looking for this top. And look at where it's balanced out. If I just work this out. Bang on. Stalled. Bang on. Based on key levels. Now these key levels are markers. They show me where the market can move to, what it's trying to achieve. Now this can recede on itself to continue to move higher. Well, if it does, then my next part is here. But that's got 1, 2, 3, 4, 5, 6 levels to smash through. Now as day traders, I'm not expecting this to go from 1 level and smash through 6. There's a high probability these levels can hold. And why? We're at stretch points. If it's at a stretch point, that means every one of these levels that it's coming into is a potential to repel the price. And what happens is, even though you've got this huge volume coming in, well, what goes up must come down. Now that'll come down with some gusto. And it might come all the way back down here, 50% of the move. Now, if we look at this, and I just sort of put a measuring tool in, so you can see there's the low of this, there's the high of this, before it even moves anywhere. That's to this red line is 50%, because that's what that arrow is, it's 50% of this move. So how far is that? Well, that means I'm going to have to weather heat to the tune of 192 pips if one of these starts to buckle. That's a hell of a lot to move. You know, you can't take it. And the idea of getting in tight and then having these big runs, it just doesn't happen. It happens occasionally, but not enough to be traders. A trader will get in here, they'll get out before it gets to there. You know, and there's various different ways you can do it. Now, we can also check this to see if it's at a key turning point. Now, there's ways you can do that. This move here, so you've got this move there. It's gone into some kind of retracement, and then it's gone full retracement here. But what's the opportunity from this? Well, if I put on an extension from the last major move, it'll start highlighting where this thing will potentially bottom out, or top out in this case. Well, it's actually at the topping points right now. So you got there's your 127, it buckled at that point. There's your 161, it buckled at that point, and you can see it. So for it to smash through, it needs a lot of energy. Now it has got it. If it keeps on going, that can run all the way up to here. There's your next point. And surprise, surprise, it's actually lining up with levels. So again, buckle point there, line up, buckle point there line up, because that could have been anywhere, it could have been in the middle of the candles, but it's not. It's funny enough, it finds the buckle point, and that's from that movement. If you're looking at retracement points of view, came down, where did it go? Well, look, it stalled all the way along that 50%, which happened to be very close to a level. And then if you drop that into a 5 minute, there'll be compression all the way along here. In fact, we'll do that. We'll have a look. So we come along and you can start to see what's going on. There's that fib running through. Look how the price on the 5 minute is respecting it. Boom, 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 all the way through. Then when it runs up to the next area, again, it's up here. These are not true Fibonacci's, but they're not a million miles off. But bang, bang, straight back down into compression, then off to the races. Boom. And then across the tops again, down into levels. So your levels, your fibs, everything like that is absolutely crucial. And all you have to do is go from one to the next. And it's that simple. And in this scenario, if I just kind of flick it back and we go to see what the price is up to, it's now stalling, because that's exactly where the tops of that move was, and it's just pulled in 116 quid. It's currently 10 to 11, so half an hour, 116 quid in half an hour. Live with that. So get in, get your money, get out. That's day trading. It's not so much scalping, it's just having a good idea and then working from a logical point to a logical point that's safe. If it runs for you, because I did pull the stop in when it got to the green line, moved it up, took best part of the trade off, left a little runner to see if it'll keep going. Well, it didn't. It decided it was reversing back, but I had my baseline in where I didn't want the price to go beyond. So either way, I was getting paid what I needed. That simple. Hope that helps. So if you're stuck, very easy found, drop in the comments. Always happy to speak to you. You find all my contact details there. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.